The 13th of March, so I hope everyone had a good weekend. Just having a quick recap then of the overnight news. We'll have a look at what's come out over the weekend, what we're looking out for this week, because there certainly are a couple of big events forthcoming, which this morning you're seeing a relative kind of mixed open, I'd say. The equity markets seen a little bit mixed. The Euro Stoxx slightly low in the futures. The DAX a slight positive print for the time being, just sub the pivot level, which has had a close look at earlier this morning just through the cash open. US equities are pretty quiet, as to be expected this time of day, just hanging around pivot in terms of the SPUs. Currency markets though have seen a bit of movement, a bit more of dollar weakness. Actually, if you remember, the dollar weakened on payrolls despite the kind of headline beat, the fairly decent report really, no real clangers within the data, but it was almost as if the market was expecting more, just given the strength of some of the data that was seen earlier in that week, i.e. ADP was so strong, the payroll reports didn't quite live up to that hype, and so the dollar's come off a little bit since then, although it's recovered since Europe have come in. But consequently, the major pairs have been on the front foot. In terms of sterling, seeing some outperformance this morning. We're going to talk about that shortly because Article 50 is still very much on the agenda. But if you look in terms of the very early trade seen this morning, we kind of broke what would have been Thursday's high, kind of defining around the top side of the range from the second half really of last week, breaking that just as Europe came in, the volume stepping up, so likely just triggering some stops and a quick run through to R2 and then briefly beyond before just seeing a bit of a pullback here more recently. The euro just looking really over the course of last week, and it was really that ECB press conference you can see there defined by that candle there was when we moved higher. The kind of less dovish, I guess, is better than saying it was really outright hawkish in that nature, and then when we broke higher through that high as well seen on Friday afternoon from what we had back on the Monday morning when we got the previous week underway. That kind of also accelerated some of the buying in the pair, and now we're back up to around 107.50 around the highs this morning, before seeing maybe a bit of profit taking on that more elevated move, given the gravity of the gains that had been seen really since Friday's session on some of that dollar weakness, and then the kind of more less dovish ECB that we had. You know, we've had a move of pretty much 105.50 up to 107.50, so probably a fairly natural situation for a bit of profit taking at these levels for the moment, especially with a lot of the things on the agenda for this week, namely as well the Dutch elections, which we'll have a look at as well. Elsewhere, crude's been seeing a bit of recovery from the morning, but I think just putting it in some context, this was really Friday afternoon. We continue to move lower, and then post the Baker Hughes US rig count, that's also drawn a bit of attention, and the recommencing of trade overnight, and these are in effect the lowest levels we've traded in roughly about 3 months, having just seen at the session low at 47.90, a brief look below the $48 handle before seeing a bit of recovery as Europe has stepped into the marketplace. A quick look at oil then. This is kind of the main headlines that's explaining that move for the time being, or at least drawing the attention this morning. And as I mentioned, those rig count numbers. So looking at what we had on Friday, this number comes out around 6 o'clock. You had the Baker Hughes US rig count was up by 8 to 617. That's the 8th week in a row that it's risen, and the rig count now the highest since September of 2015. And if you remember rightly, if I bring up this chart first, that was 9.088 million, which was of course the move here, this production line, if you like, that's moving up at a steeper trajectory to the actual rig count as they become more efficient in terms of the productivity per rig. This is starting to diverge in terms of the difference as we're going forward here, as the kind of taps are being turned back on. But that 9.088 million is what we had in that DOE oil inventory number mid last week, and showed that US output was drawing real attention. And if we flip back to the oil chart on, say, a slightly shorter time difference, you can really see last week this output situation in the US is really starting to come together. You know, this is only, well, if we look at last week, if I put a marker here, that was really where last week started. So this right hand side here was the price movement. If we look in percentage terms, going from the high to the low, you know, you're talking about an 11% move. And considering how quiet oil had been, it was almost as if OPEC were very nicely fulfilling their objective of keeping price fairly stable in that $50–$55 range and closer to the upper bound by having a high level of compliance. Well, this US output situation really came back to the forefront, and we had that really big move on that evening and afternoon of that output figure coming out. So just quickly going back, US rig counts to be monitored going forward, because the quicker they keep rising, you would imagine then the more that they will continue pumping on the US side. Here you can see just on the bottom in the red, these are the numbers of rigs that have been added. So on Friday we had for the prior week 8, but you can see it's been consistently on the increase here for the last, really, I guess this is about two and a half months, but it goes almost stretching back right to the second half of really 2016, and hence then the price has continued to edge up in tandem though with the rig count. So again, this going back to the conversations we were having about what can OPEC do, and is it going to have to just force their hand given the lower price point in which the shale industry can now operate, which is more 35 to 40, which is to the detriment of most, if not all, of the OPEC nations. Okay, quick look then. Let's move on to some of the weekend's news and things we're looking out for kind of the week ahead. And this is probably much of the news that's dominated the weekend. Theresa May on the brink of triggering Article 50. So Theresa May on the brink of formally launching Britain's departure from the EU, as rebel Tory MPs admit they are unlikely to have the numbers to block the Prime Minister in the House of Commons today. Of course, this is May could trigger Article 50 any time from Tuesday if she succeeds in heading off the rebellion. If I scroll down, it will give you a bit more of the procedure. This is in the FT today. Just give me 1 second, let me find the... So here, the government trying to reverse, of course, the 2 amendments passed by the House of Lords last week. If you remember, that was the one about the meaningful parliamentary vote. There was also one about the protection to EU nationals living in Britain. Some rebels have admitted in private that they are unlikely to muster sufficient numbers to prevent a government victory on Monday. That basically means then that the bill could return to the Lords this very evening, where it's expected to pass swiftly in deference to the will of the Commons. So even though this is kind of a roundabout circle, and a House of Lords basically they're going to get rejected here, which is most likely by the Commons, where then the government has a majority, and some of the other MPs are unlikely to go against the government. Then it goes back to the House of Lords, and even though it's the same thing they're looking at, effectively the fact that it's gone once through the cycle, they don't just go back and forth through this ping pong game forever. They've had one chance at it, it failed, and so therefore they basically accept it. The legislation then could achieve royal assent on Tuesday, when Mrs May will update the Commons about last week's EU summit. She could use the moment to announce triggering of Article 50. Even if that timetable proves too tight, aides are certain that the process will begin before the end of the week. So even if it's not done by, if you're looking at a timeline, I'd say the earliest would be Tuesday, when she has that that meeting in the Commons about last week's EU summit. That's the earliest. The latest would be the end of the week. Either way, it's probably going to happen this week for sure. What does it mean then? What to expect from UK markets when May pulls the Brexit trigger? And I actually had a phone call from one of my friends who's heading over to the States, to Washington DC. He's a mechanic, and he does classic cars, and he's buying some parts that he needs, and he sourced it all the way back to Washington DC for basically an old classic Porsche. And he was asking me about where or when should he actually change up some dollars. Is it going to be any monumental shock in prices that he should be aware of that means he should change up now, or should he change up later in a few days' time? And really, I think to a large extent this has been priced in, at least the trigger itself. I don't think you're going to get this kind of huge relief rally or big bout of uncertainty immediately shoot into the price of sterling. Probably that will wait until we actually go into the first formal negotiations, which will probably start happening in early April. That's when you'll get the real feel, or first feel, for actual sentiment from Europe and how these talks are going to get off on whether on the front foot or the back foot. Couple of articles though, I did send this out to you guys this morning, talking about this very same issue, what to expect in UK markets when May pulls the Brexit trigger. And what you're looking at here are a couple of things defined by the charts. This is implied volatility stays low before Article 50 trigger. A lot of people, a lot of banks have been saying that actually it's not so much the direction that they think is going to be the bigger trade, it's more actually the volatility that might start to pick up, and the price swings might start to become more of a regular occurrence as we go through April and then the weeks and months ahead, because otherwise it has been a fairly confined and steadied range in cable. A couple of the banks and headlines and what they're saying. Bank of America, we reject the notion that sterling is fully priced in Article 50 and beyond. So that's going slightly obviously against what I was saying, but they do say risks to the currency remain to the downside on a disruptive start to negotiations. JP Morgan also bearish. Bank of America preferred strategy is to bet on greater swings in the pound. So this is what I was talking about, rather than its actual direction. So you might start to see those volatility indices start to pick up going forward. Meanwhile, Morgan Stanley is more sanguine and thinks the triggering of Article 50 shouldn't come as any major surprise. There may be many Article 50 related news headlines in the coming weeks, but we believe that a lot of the negativity around Brexit related economic data weakness is already priced in. So there is a bit of a mix, but the main thing here is that it's not just one dimensional, if you like, that it's a net negative at this point. That is probably the bias of how the market sentiment will be going through this period of political uncertainty. But I don't think it's going to be initiated just by this triggering event that's going to happen this week. The other thing that we're looking at here is the UK equity volatility is pretty much at a record low. You know, if you look at the subprime crisis here, when we were, it's like a massive spike up in 2008. And to look where we are at the moment, even during really Brexit, it didn't really cause too much movement. And so UK equity investors are not losing much sleep over Article 50. In fact, then stock volatility as measured by the V FTSE index is near a record low at the moment. But what I would say then is, if we do start to get this pattern that we've seen slowly materialize, which is inflation moving higher, consumer households, tightening their belts, losing confidence, their spending starts to slow, corporate profitability starts to weaken, then profit forecasts start to get downgraded, this could certainly start to see this liven up, I would say, in the kind of next 12 months. So it's kind of your latest situation here. On the gilt front, I know you guys don't directly trade that, but from a fixed income perspective, so you're aware, this is what ING is saying. This is pretty much the thing to watch out for here, is it's worth watching the level of foreign ownership of UK bonds as a gauge of sentiment, because foreign ownership of UK bonds has slipped in the past 2 months, and if that becomes a 6-month theme, then that's going to be telling you something, which I totally agree with. So maybe another angle to look at going forward. Okay, a few other things. Dutch election, that's kind of It's amazing how the media works. It's almost if someone at the media agencies just woke up and thought, oh, there's a Dutch election. Let's just put every single journalist on that and make that now splash headline news. And let's find the most evil-looking picture I can find of Geert Wilders to kind of spin this populist kind of view, if you like. I think every single picture I've seen of this chap, I think he looks either angry or like Dr. Evil. That's how the press are kind of making it out, which is kind of a bit of a sign of the times. But looking more realistically at what this situation is, the main candidates, not going to go over this too much detail, you're kind of aware, but this is a good little summary here. So essentially there's 150 seats up for grabs in a Dutch parliament. This is happening on the 15th, the vote, so this is this Wednesday. 76 are required to form a majority. And the incoming government is likely to be made of at least 4 to 6 different parties. This is because of the extremely close run race amongst the polls. Very much a coalition will need to be formed in the long term. No outright kind of government, if you like, or victory could be even from the VVD, which is the People's Party for Freedom and Democracy, which is led by the current Prime Minister Mark Rutte. The Liberal Party has held a majority in the Dutch government since 2012, but that's soon to change. So that government looking for, or that party looking for 40 seats, the PVDA Labour Party 35 seats, so they're the kind of other big players. The PVV is the Party of Freedom, that's the Eurosceptic Geert Wilders heading up that populist Party of Freedom movement, and that's, well, this is the current seat structure, I would imagine, so 12 seats, but he's looking to jump up and contest up and around with these guys. If you're looking at what the polls are saying then, this is one of the latest ones, and it shows then that Wilders, who is previously seen on top of the polls, has lost some momentum more recently. The Freedom Party is said to secure the second largest number of seats, that would be 21 to 25. You've then got an estimated 18 to 20 seats to the Christian Democratic Appeal, look to come third, and so the current majority party looks to come on top. That would be PM Rutte's party. But what does this mean for Netherlands? But based on this current setup then, at least 5 parties would need to team up together to reach that 76 seats required to form a coalition government. The only problem, as you guys probably already know, is that every other political party has said that they will not team up with Wilders' Freedom Party. What does this mean then? It just means that you'll probably get a political stalemate for the foreseeable weeks and months before they can actually get together, talk around a table and negotiate how this is going to work. So I don't think it's going to be, again, too shocking for the market. Even if Geert Wilders wins, the technicalities of it are that there's nothing that's going to happen immediately. It's going to be months before they actually get together and what the government will look like to then determine what can actually be achieved. But certainly that's to be something to monitor. Timings wise, because it's a question I always get. So it's Wednesday. They have until 9 PM local time to vote for their preferred leader. The results are counted and announced overnight, and it's anticipated there will be a clear indication of a winner by 5 AM or 6 AM local time. So by the time that we come in on Thursday morning, we will know what or who the winner is and what the actual seat counts are and so on. However, as I said, it could take days, weeks or even months for these Dutch parties to agree on a coalition. So we'll know the winner, but we won't know the shape of the government quite yet. On that side of things, talking of elections, I tweeted some things last night about France. I will leave this for you to have a look at. If you just jump on my Twitter feed, you can see it's one of the more recent ones that I did. A couple of interesting graphics here that I saw from Deutsche Bank, which was talking about basically the French electoral cycle in potential scenarios with indicative probabilities based on opinion polls and timeline. So this is here where we're heading into the 23rd of April, the presidential first round. Then we get the runoff. And this basically gives you the different scenarios and the probability of those occurring. And then depending on who wins, with assigned probability percentages what it could then lead on to, and then on the left hand side what the timeline of that would be. So obviously Le Pen, the red, i.e. danger, if you like, in terms of market sentiment, that would cause the biggest shock and ramification in market prices. Certainly if she followed down this, if you followed the tree down here and then to the far right hand corner, that would be essentially a referendum result to leave the EU, which obviously comes with a lot of legal complexity and institutional law changes, but that would be the most market impactful scenario. So maybe check that out if you have time. This also summarizes market outcomes across different scenarios and looks at different asset classes. So they're given rough FX forecasts. So if the market risk is the highest, would be a Le Pen win. She then is able to form, I guess, cohesion in that she can call and change legislation to have a referendum. Then the people of France vote to leave. Euro dollar, they've got here of an FX forecast would be trading at 0.8. So forget parity. And this, I guess, is based upon the premise that, you know, if you're looking at Europe as an ideology, then really France is the staple alongside Germany that really is the glue that holds Europe together. And if they were to leave, there would be severe question marks about the future and validity of the Eurozone as a whole. So hence there's such a negative forecast. So check that out. This is what the Deutsche are looking at if Le Pen in a referendum win. Again, I point this out as an extremely low probable scenario, but look at the estimate that they think that would have on GDP in France, a contraction of 4% in 2018, if that was to occur. Obviously, if you get a more centrist reformist government, or even a centrist government with no reforms, you can see here the two on the left, the kind of light blue and the green, that's kind of the most beneficial for, I guess, continuity and growth prospects going forward for France. One other headline, just so you're aware, and I do believe we have the Bank of Japan interest rate decision this week, and although if you've read this article I sent out to you this morning, it's unlikely you're going to hear anything on this matter this week in a decision, but something to be aware of going forward, especially if you're trading in Japanese yen, is the Bank of Japan could consider adopting a range for its 10-year bond yield target when it eventually looks to increase rates or needs to manage market volatility. This is according to people with knowledge of discussions at the central bank. So as they say, although the change might be still long away, having a range for the longer term yield goal may come under consideration at some point, according to the people who asked not to be named. Although the BOJ remains confident about managing the yield curve for now, a range could be considered in future if it finds present measures insufficient to quell volatility. So that could be something to monitor going forward. On that regard, talking of central banks and policies, there was some ECB source comments on Friday that were talking about the ECB had some discussion about movement of interest rates, irrespective of not ending QE, so following a slightly different format to that of the Fed. And with that in mind, I would keep an eye out for ECB speakers today, as we do have an event ongoing in Germany. First of all, you've got Sabine Lautenschlager. She's speaking in Dublin at the Institute of International and European Affairs. No real title here that's been given, but we'll keep an eye out for Lautenschlager. The bigger one is here. You've got basically Mario Draghi is giving the opening address at a joint conference about fostering innovation and entrepreneurship in the euro area. This is in Germany. Although not expecting a great deal out of this because of the close proximity of the press conference, I will always keep half an ear on when the president is talking. And at the same event, you've also got his right-hand man, Victor Constancio. Peter Praet is also speaking as well. So this event is going to be ongoing throughout the day. In terms of Draghi, this is CET, so we're looking at 1:30 London time for when those comments are going to come out. And as you can see here, the text will be made available on the ECB's website. So I guess then by that they mean there's a predefined speech already written, and those comments will drop out immediately at 1:30. quick look then at the day. Very quiet actually in terms of economic data. We've talked about those ECB speakers, so they're all on your calendar. Keep a close eye out for those. A quick look at the week though in its entirety, and it is an interesting one for several reasons. On Tuesday, you'll get some Chinese data by the time you come in. Industrial production, retail sales, fixed asset investment. You also get the ZEW German economic sentiment reading. That always draws a bit of attention in regards to Euro, DAX and Bunds if you're trading those instruments. More interesting then is Wednesday for a couple of reasons. For one, you get the UK average earnings claimant count rate, so the latest job situation in the UK. The Dutch election, that gets underway, but don't forget the results you won't know until the following day's morning. The polling booths don't actually shut till 9 PM local time. Then in the US, you've got a very interesting day because you've got US CPI data. Now CPI is a real key component for Fed decision making, and even though that if it was weak, I don't think it's really going to deter the hand of the Fed because it's been on a fairly steady incline of late, and I'm sure they could take that as just a blip against what has been a trend of increasing inflation that has been materializing in the US. Alongside that, you do also have retail sales, so you've got two quite critical pieces of information which come ahead of the actual FOMC statement, the summary of economic projections, and of course Janet Yellen giving her press conference. So it's the full Monty, so to speak. And of course, markets 100% priced in for March action. What's going to be critical here is what do we hear out of the projections, more importantly Yellen, because I guess it's probably unlikely we'll see any change in the projections. It's more, how does Yellen sound in the press conference and Q&A? Is this a hawkish hike, or is it neutral or dovish, and so on and so forth. Okay, Thursday, just having a quick look. Again, you'll have the Dutch election result. You've also got the Bank of Japan interest rate decision overnight, so you'll know that as well when you come in, or if you're trading the yen overnight, you'll be on the lookout. We've also got the Bank of England interest rate decision. Now, obviously no one at all is talking about the Bank of England. I guess from a monetary policy point of view, that's probably one of the most boring at the moment in the Western world, just given the fact that we're likely to see no change for the foreseeable future. But nonetheless, that will come alongside the minutes, and probably focus there will still be on inflation more than anything else, and how they view that going forward. End of the week, G20 meeting gets underway in Germany, and so probably you might get the triggering of Article 50 then, if not happening by Tuesday night, possibly by Wednesday. That 15th has also been a touted date, and then this will probably lead into then the G20, where then that could be a discussion point, certainly on the sidelines at least. We finish off the week as well, just so you're aware, quadruple witching, so we normally see some elevated volatility in the US equity market, as well as some other US indicators. But economic data probably, after the Fed have communicated on the Wednesday, is probably going to start to lower its importance, because we'll have more of a predefined idea of where the Fed are taking policy going forward for the foreseeable few months. Okay guys, that's the morning briefing. Guys who are just transitioning onto the floor today into live markets, good luck. Take your time. Today, as you've just seen by the calendar, is the most quietest day on the schedule by a clear country mile. So, you know, don't feel like you have to jump into the market. There's going to be plenty of opportunities, I'm sure, that will arise as we go through the week. Okay, have a good one, and I'll see you in the chat room. Thanks, guys.